I think girls, good afternoon, good evening, good morning. As we do every single week, we usually do the overview call and a bit of training on a Sunday. But we had some family stuff going on last night. I was out at an event. Matthew was out with the little ones. But I just asked the question there, who has had a good day? We had bloody good day, great day, amazing day. What a rush, smashed it, amazing day, brilliant start to the trading journey, fantastic day, great day, mixed day, but an amazing afternoon, great, A1, up 10%, yada, yada, yada. Listen, I'm going to go on to my results channel now, right? And I want to see how many of you have sent results. All right, results channel's actually looking pretty tasty today, I'm going to be honest. There's going to be some more results pinged out later today. But again, this is where I love it. If you guys can share with us day by day how you're getting on, it's okay to share if you're losing sometimes. It's okay to share some losses. Some of you are up 10%. You're getting clarification on things, which is fantastic. The day is still continuing. Love it. First day, €65 up. Still haven't got a clue. Love it. You're on the right call. So tonight, as we do every single week, we're going to go through the market, how it works. He's going to share with you what it is that he does. We'll do a bit of a Q&A at the end. But Matthew, I'm going to ask you to unmute my friend and we will dive straight in. Um, but this is the type of stuff that I love reading, bro, is the results that are coming through. Today's been nice on the back end as well. So, bro, I'm going to let you do as we do every single week. First of all, I'm very grateful for what it is that you're doing. Sitting in the cave all day, firing out stuff day in, day out when you could be spending time with the fam. So obviously I
I
know you're doing this for
don't want to do that. I don't want to do too much of
yeah.
that.
All right, we'll take that back just in case.
Got three kids, mate. This is my sanctuary in here.
But mate, I'm gonna let you run it up, guys and girls. I appreciate you all, and I'll let you fire it in.
Cool. Good evening, everyone. Just quickly before I go on to that, I've just seen a question about the high risk. It's a very good question. What I like to do, I'm not going to go into why it's a high risk trade when we define it as high risk. Just know that you've got two options. You should either lower your risk by a third or up to half, or just don't enter the trade. Simple as that. Okay. You don't need to know anything more than that. But if I put high risk trade, it means that there's something that I define as high risk. And therefore, what I do is I lower my risk by a third to up to 50% less, and then or just don't enter the trade if you're not comfortable with higher risk trades. Simple as that. Right, with that out of the way, let's jump on to the juicy stuff, as they call it. I've sent a request to share, mate.
Yeah, done, bro.
There
You
we
good?
go. All good.
And also, guys, for anyone listening, I have set the chat to just me. So if you do have specific questions, you can always ping them over to me, and we will cover it towards the end of the call. But I'm gonna stick myself on mute now and let you run it up, mate.
Cool. So before we look at the layering, as always, every week we need to talk about trade discipline. And trade discipline is essentially following the same structure process for entering and managing your trades, regardless of market conditions, regardless of how you feel, or regardless of a previous outcome, whether that be 10 wins in a row or a stop loss. Stop losses back to back like that, as we did today. In order of importance, they're all equally as important as one another, and it's very, in fact, it's imperative that you stick to these things, because your mind, your eyes, your heart, your emotion will lie to you in trading. It's just part of the game. You're not actually mastering the charts, you're mastering habits, you're mastering yourself. So it's very important that we come to every session with a mechanical system that we trust, we rely on, and we don't waver with it once we have it in place. Okay. And those key things that we're going to talk about are respecting the technical validity of every single setup, and that means that a trade remains valid as long as the structure holds. And if a stop loss is triggered, it simply marks where the idea is no longer valid. It is not failure, it's information. What this means is that you can enter the trade until TP2 is hit or stop loss is hit. So if a trade spikes up to TP1 and comes back down to entry, the setup is still valid. We no longer remind you that the setup is valid because it causes more issues than it's worth. Just know that if a trade has tipped TP1 and you want to enter at your own risk, although we remove responsibility and relinquish responsibility of the trade once it's delivered value, you can do that. If you are going to enter a trade once it's hit TP1, I encourage you to journal. and journal and see how many trades you enter after TP1 that go to TP1, 2, and 3, or wherever they go, and how many trades that you enter after TP1 hit stop loss. And then you can figure out your percentage and what's higher probability or not based off your own risk management strategy. The next thing that I want you to concentrate on is maintaining consistent position sizing. You have to avoid emotional or impulsive changes in your lot size. I want you to use a fixed risk percentage per trade. Obviously, you need to define that based on your own capital, and that will allow you to reinforce those discipline habits again. What this means in a nutshell is, let's say, for example, we have a day which is not uncommon for us, where at 5, 6, 7, maybe 10 trades back to back wins. And then you start to say, well, you feel invincible. The market's moving in our favor. We're non-stop. And then you up your lot size. And then we hit a stop loss or two. You're going to wipe out all of that equity that you've gained. I've seen it many, many times. Arguably on the same.
Is it my signal?
Make that equity back. And also, it is going to make you more sporadic in terms of your approach to the market. So make sure that we're not over leveraging. Make sure you're using a lot size that's relevant to your equity. Again, that's not anything we advise on. The general rule of thumb is 0.02 per 1,000, but it's not anything we advise on. Just know that you need to be using the same lot size, whatever you choose, every single time you enter the market, unless I say high risk, and then you've got the right that you are able to lower it then in those occasions. The next thing we need to do, and this is something that we need to have before we even take a trade, is be consistent with your profit taking habits. You need to use a defined take profit strategy, whether you're scaling out or aiming for fixed levels. Consistency in your take profit levels is going to allow you to accurately review your performance and look for areas of improvement. What this means in layman's terms is, if you are a take profit one taker, take profit one all of the time, or at least for a week or 2 or 3 weeks, until you find your feet, until you find what you're comfortable with. If you are a person that sets stop loss at TP2 to break even and then holds to TP3, do that all of the time. If you are someone that takes partials at TP1 and then holds to TP2 and 3 and whatever, then do that all of the time. Whatever it is you choose to do, be consistent with it. The next thing I want you to stick to is layering at those uniform intervals, and that is ensuring that you are layering fully into the trade stack that we give you. That's at every 10 pips. Again, this is going to actually help you control your risk profile, and it's going to help your execution be systematic. Now, I know that sometimes a lot of you are missing the trades, and obviously price moves quite quickly. That is why we've added a dashboard, and we're now giving you the full stack in one go. And we'll also, when we remember and when we are able to sending you a message to say prepare. And I know I've had some really good feedback on that. That's something that we're going to implement moving forward. The last thing I want you to pay attention to, and this is not something that you do, it's something that I want you to bear in mind, is that we always continue to give updates, and the cost to do is at your own risk. Your management decisions are your own, your exits are your own, and they should always align with your own risk strategy and your risk tolerance. And know that every time I give you information, it's to help you. It's never to steal pips from you. If I see price moving to a certain area and I say a certain price, it's because it did it. You're not looking at the screens like I do every day, 16 to 12 hours a day, most days. We've got 3 screens in front of me, so sometimes I'm going to see things you don't. Right, with that out of the way, let's just have a look. We're just going to look at one example because there's no point looking at any more than that. Every week we do the same thing. So let's just look at one of our entries and then your 2 different options that you've got once you're in a trade. So this is actually a trade we took today. This was a buy at 4083. This is our buy zone. And what we're looking for is price to come into the buy zone, to the open and towards the 50%, normally 10 or 20 pips below that, because that's what my experience tells me. And when price comes into these zones, this is when I send the signal. So let's take this one as an example. I would be sending prepare, and then you would get the buy signal into the Telegram channel. As you can see, the first 4 digits say 4083. So what I want you to do is immediately get out your phones as quickly as possible open up your MT4, MT5, and if 4083 matches any of the first four digits, I want you to click the buy button. If it does not match and it's at 4084, do not get in a mood, do not message support, do not put your phone down. Be patient and wait to see if it pulls back before TP2 is hit. Again, it's your decision if you want to trade it if it's hit TP1. But 9 times out of 10, it will fluctuate about and then it will come back down to your entry anyway. You can then click the buy button at 4083. And then very quickly, what you're going to do is you're going to set up your buy limits. And if you don't know how to do that, there's a video on Bradley's YouTube channel. I'm sure he'll be happy to send you the link for that. Then you're going to set up your buy limits. Your buy limits are set up at the other digits between this in this stack by 10 pips. For example, we have our market execution. That is the price we entered the market at when we clicked buy at 4083. You are then going to set up the buy limit at 4082, 81, 80, 79, and 78, right? And then our stop loss is at the bottom here at 4077, just below our zone. Now, the group is updated in the most risk-averse way to trade. It is not the most profitable, and there are days when you might struggle if we hit a couple of stop losses on a full stack, but it is the most risk-averse way to trade to first start to learning how to trade, and that is how the group is updated. I will go over the other option in a minute, but this is the way that we teach people to layer in and out of the stacks when we are first trading. So we have our first execution of 4083. And as you can see in this example, price action has come down and activated every single one of our layers in this example to the absolute pip. If you want to trade in line with what the group is updated in the most risk averse way to trade, as soon as your worst entries or the least profitable entries are coming into profit, as soon as they turn blue, I want you to be closing them out. The reason we close them out on the way back through the range is because let's say, for example, we take a stop loss here, we're only hitting it on 4 positions, not the full 6. Again, if as soon as price comes through the range, we're going to slowly take all of those positions out until we only have our best entry running. And at this point, 60, 70 pips, I would expect anyone to be setting the stop loss to break even. So I'll show you that one more time, and then I'll just show you the other options that you've got. Again, I will be sending the buy signal as soon as price comes into our zone at 4083. Pick up your phone, click the buy button if it matches. Don't get caught up in anything else. If it matches the first 4 digits, click the buy button. If it does not match the first 4 digits, you can wait on your phone until it does. Then what I want you to do is set up the buy limits at the prices that are below this number in the stack to this number and no further. So then we would have a buy limit at 4082, 4081, 4080, 4079, and 78 in this example, quite a big stack. And as you can see, prices come down, activated every single one of our layers. And as price is moving back through, I want you to start closing them off at break even or in a small profit until you only have the best entry. Once you have your best entry running, or your best entries, you can leave 2 if you want, then you can choose which take profit level to go for. Now, just a small bit of advice before I move on to the last thing we'll talk about, which is the other option once you're in a trade, is that if you are going to just hold the one position, you are better off holding for TP2 and above. Because if we hit a full stop loss a couple of times on the full stack and you're only taking TP1s, you're going to really struggle to make money. Taking TP1 all the time is actually higher risk than holding your take profits 2 and 3. But again, you need to find what you're comfortable with. And if you are taking TP1, you will still be profitable, but you may find it harder. So my advice is always aim for at least TP2 and just make sure you're managing those trades effectively, setting the stop loss to break even when we say it in the messaging, or around 70 to 80 pips is a really good place to be setting your stop loss to break even. The other option you have for higher risk traders, for more experienced traders, which a lot of you do, I know, is you can hold these layers. Now, if you decide to hold all of these layers and you go to TP3, you're going to be making 10, 15, 20% a day, but you are also going to risk hitting stop losses. And when we do hit stop losses, it will damage your equity. So my advice, if you hold the full stack, is at least Your three worst entries should be set around TP1 and 2, and your best entries you can then hold to TP2 and 3 and wherever it is that you feel comfortable. That's how we, but remember, everyone, sorry, that the group is updated in the most risk averse way to trade, and we will base it on if you're in these trades and we hit stop loss, it will be the worst entry that we count it from. And that's it. It's as simple as that. You just need to make sure you're doing that every time. And if there's any questions, I'm sure Bradley can
I
jump
think
on
the one
with
thing there
answers.
to cover, mate, would be about going like break even. So like when to go break even, when we mention going break even or risk free, yada yada yada. What does that? Because like, there's a few people who are relatively new here. So what does that mean, and how do they navigate that if their trade is in a little bit of negative equity, let's say?
Lost you. Sorry, chap. I lost. You froze on my screen. Then what was the question?
So basically, let's say, for example, the trade is you say we're going break even or we're going risk free. What does that look like from a client's perspective? Could they be in a little bit of drawdown? Could they be in a little bit of a negative?
Yes,
What
they can be. Yeah.
what would
Okay.
you
So
mention in that regard?
so obviously we only call a stop loss to break even when all of those stacks are on my screen back to where we entered the market in. Now, of course, I'm not going to know where the 3,000 people that we have as a totality in the community is at. So all we can do is mark it out at the timestamp we sent the signal and assume most people are in around that. That's the fairest, most reasonable point. So my advice is if you're in a few pips drawdown, 10, £15, just set the stop loss to that trade of your worst entry to the number that I've put in the group. That's option one, or just take the hit, close in a small loss. That's option two. Now, again, what I advise you to do is journal. Okay. Remember, this is not set and forget trading. It is demanded if you're trading gold. Unless you were happy with setting a TP1 or TP2 and just hitting stop loss, one of those, this isn't set and forget. So my advice would be write it down. If you choose for 1 week to move your stop loss to the ones that are currently losing to the price I've put in the chat, and you work out that actually you don't hit many stop losses, and then if you decide to just close out at a loss and you decide that you're losing too much money, then obviously you can change it around.
I think that's a big thing for people in trading to to kind of get their head around. It can be an emotional roller coaster in this game, especially if you're relatively new. And closing out trades when you're in a little bit of a negative is sometimes the hardest thing because then that trade will naturally, and this will happen to all of you, it'll run to TP 65,345,000, and you feel like you're not in that trade. But in theory, you followed the rules, you followed the stats. And if you did that every time, over the period of time, your account will grow. And I think that's a big thing for people to understand in this is it's okay to take a couple of small L's every now and again, as long as you're kind of following the kind of system that we're putting in place here.
Yeah, it's a psychological thing as well, isn't it? I mean, especially if you're new, seeing green doesn't look great, does it? But it's just the color of it,
Yeah.
right? It's an absolute necessity. It's actually the only thing people fall over
Yeah.
is they just can't possibly take a loss. Now, the reality is that you shouldn't feel anything towards profit or loss
Yeah.
because you're not. It's not about being wrong or right. It's about being on the right side of probability. Sometimes we're not, and sometimes the better thing to do is cut a small loss. That isn't a problem because you're far making up more profit than your losses over long term on with this
And that's
strategy.
that's actually what I'm going to cover on tonight's mindset call. That's on I'm putting that on at 8:30 tonight. So I'm going to actually cover that on tonight's call a little bit because like been in the game a while, that is what most people struggle with. They struggle with that inner voice that people have actually got. Like, should I close it? Shouldn't I close it? What's the trader going to do? Where will it go? How much money could I make? This, that, and the other. So that'll get covered on tonight's call as well and broken down into like some more psychological side of things as to what people kind of need to feel when they're trading.
Mm,
Because if you just take the trades as they come through and you understand TP1, TP2, TP3, you don't always have to aim for TP 65. Like Matthew said, you TP2 and you're doing this consistently, you'll make good money. But a lot of
mm,
people they're taking, TPs in between entry and TP1, and then that one stop loss comes when you're fully layered and it feels like you've just had, a jab on the back of your throat.
mm.
So Like with this, the key is like as a lot of you have done today in the results channel, following the system and how it works. It's always great when the market's in our favor and we're hitting them left, right, and center. There are going to be a few occasions where we hit a couple of back-to-back stop losses, where we have a few trades not go our way and we have to get out of the market. That is trading. It's like riding a bike. You're gonna have to fall off every now and again, so that's the key with this.
Yeah, absolutely agree.
Best format to use when journaling. I mean, for me, write them down, like trade, entry. A big one for me is writing down how you feel when you're taking that trade. That's one big one for me. But again, I'll cover that on tonight's call as well, so you don't have to feel any type of way about it.
Mm. Yeah, I mean, I obviously it's different for people that are just taking the trades on MT4, but if you've got access to Trading View and you are someone that watches the charts while we're trading, trade journal on the chart,
Yeah,
right? Get the text bucket, say, right, I entered at this price, this is what happened. I am got involved emotionally at this point and then it failed or whatever it is.
yeah,
But that's the best way to do it. And then at the end of the week, what I used to do is actually go back and review every trade. That's how I learned as quickly as possible.
yeah. Because on Friday the market stops, so you have time to reflect. But it's hard when you're in the mix trying to do it all at once and you're trying to journal everything and you're trying like. But if you can just have a little scrapbook next to you and you've got your chart in front of you, it's a very very easy place to be, because I think the key with this, and you guys on this call can correct me if I'm wrong. Some of you feel like you need to take every single trade. I've been in this space, and I'm just going to say this, since 2017. Matthew is a fucking beast. The volume of trades that he sends, there's no emotion. It fits his criteria, send. It fits his criteria, send. For those of you who are new, it could feel a bit overwhelming sometimes because there might be 27 trades before 10 a.m. You've not even had your fucking Cocoa Pops yet, right? You not even took the kids to school. So, like, you don't have to take every trade, guys. So, yes, it's ideal if you do because then X, Y, Z, but don't feel that emotional type of way that, oh my God, I've missed one. I hate my life now, yada, yada, yada.
Mm.
It's part of the process.
Yeah, it's a great point. I mean, today was one of those days where actually I was actually going quite slow, to be honest, and we ended up with 20 trades. If I'm honest,
Guys,
they were
I'm
quite.
gonna tell you on this. Some other communities do 20 trades.
Oh, yeah.
It took them 10 days. The
Mm,
average community that I used to watch used to do 2 trades a day.
yeah. So my point is right is that like let's say for example if we take the person that said they're 10% up today, if you're 10% up and you haven't muted that group and gone on with your day, you're crazy. But if you're 10% up, pack it up, get out. Do not trade. You do not to take any more trades. I don't know where what profit people are in. So I will send the trades till the cows come home until I decide there's no volume or liquidity there until I've had it. But it doesn't mean you need to be in them. If you're 10% up, if you're
Yeah.
5% up, turn your phone off.
And
There's,
I
there's
covered I
absolutely
covered
no
this on
need
a
to be in
call
the
last week,
market.
bro, about like perception on money. If you've got a £500 account and you're 10% up, 50 quid might be buttons to you. It might be nothing. It might not even pay your phone bill. But you've got to think of this in the grand scheme of things in a year's time, 2 years' time, when you've got a 100 grand account, a 200 grand account, a 500 grand account. If you made 50 G's in a day, would you go back into the market and be like, oh, let me get another 500 quid? No, you wouldn't. You'd be like, adios, I'm out of here. I'm going to go buy a new X. So like thinking the long-term vision is key in this. So that's why we do these calls week in, week out. Matthew's just sat there like, it's the same shit that it was last week, it's the week before that, the week before that. But again, for those of you who are new, it is about repetition, repetition, repetition. We're not going to teach you, how to do an overhead volley in football on day one. It's pass, foot on the ball, pass back for those of you who've got kids. You don't teach them the overhead spinning fucking judo chop kick on day one. 'Cause none of them will be able to do it, right? For those of you making 5, 7, 8% today, like you're messaging me, it's madness. Someone's just put here, made 7% today, started trading at 7:30, went to play golf at 9. back on trading at 2 to 4 p.m. Nigel Brumpton, if I haven't seen your results channel being sent, that is a sick testimonial. The gold trading results. I want to see that. I will post that one tonight because I love golf as well. But that's it, guys. There's no magic pill. There's no magic potion. There's no magic lotion. Nothing like that. It's just show up, take the trade, remove your emotion, tune in, and I've got the call in an hour's time around the mindset side of things. So no more questions, and appreciate you as always, bro.
Cheers then, guys. Take care.
Adios. Good night, guys. Bye bye. I'll
Bye,
post this
everyone.
on my YouTube for those of you who ask. It'll be on my YouTube. Goodbye.